Today, I'll introduce a powerful TradingView indicator that helps identify market direction with accuracy and confidence, the Market Trend Levels Detector. Whether you're an experienced trader or just starting out, this tool can transform the way you read market structure and trend strength. And when combined with the Elliott Wave Oscillator, it becomes a complete strategy for high-probability entries. Let's walk through the setup, the logic behind each indicator, and then test the strategy with real chart examples.
Step 1. Adding and configuring the Market Trend Levels Detector. Start by setting up the main tool for this system, the Market Trend Levels Detector. This indicator automatically highlights market direction, key reversal points, and momentum strength, giving us a strong foundation for building trading setups. Here's how to add it. Open your TradingView chart. Click on Indicators at the top of the screen. In the search bar, type Market Trend Levels Detector. Select it from the list and add it to your chart. Once the indicator appears, let's fine-tune it to improve accuracy and reduce false signals. Click on the Settings or Gear icon next to the indicator name. Under the Input tab, make the following adjustments. Fast change from 12 to 20. Slow change from 25 to 32. These small changes smooth out short-term noise and make the signals more reliable, especially in choppy markets. Next, go to the Style tab and keep the default visuals. The default design does a good job of keeping buy and sell signals easy to see while still keeping your chart clean. Click OK to apply your changes. Now your chart should be updated and ready. You'll notice several key visuals. A green arrow signals a buy opportunity. A purple arrow signals a sell opportunity. A green cloud beneath price shows bullish momentum. A purple cloud above price shows bearish momentum. Trading logic. When a buy signal appears together with a green cloud, it suggests that bullish momentum is taking control. This is a potential long setup. When a sell signal appears alongside a purple cloud, it indicates strong bearish pressure, a potential short setup. This indicator gives you an instant visual read on trend direction and market bias, helping you stay aligned with momentum instead of guessing. It's the core signal source for our trading system, and the next step will focus on how to confirm these signals before entering a trade.
Step 2. Adding the Elliott Wave Oscillator. Now that the Market Trend Levels Detector is on your chart, the next step is to add a confirmation tool, the Elliott Wave Oscillator. This indicator helps verify whether the market's momentum supports the signal you're getting from the first indicator, filtering out weak or false setups. Here's how to add it. Click on Indicators at the top of your TradingView window. Type Elliott Wave Oscillator into the search bar and select it from the list. Once it appears on your chart, open the settings by clicking the small gear icon. Inside the Settings panel, go to the Style tab. Make sure the color scheme is easy to see. You want the green and red histogram bars to stand out clearly against your background. Keep all other settings as default, since the standard configuration already works well for confirming trend momentum. Click OK to apply your settings. You'll now see the Elliott Wave Oscillator appear as a histogram below your price chart. Here's what it shows. Green bars, rising histogram columns, represent bullish momentum, showing that buyers are gaining strength. Red bars, falling histogram columns, represent bearish momentum, showing that sellers are taking control. How to use it? When you get a buy signal from the Market Trend Levels Detector and the EWO bars turn green, that's your confirmation that the market momentum agrees with the bullish trend. On the other hand, if you get a sell signal and the EWO bars are red, that confirms bearish strength. By using the EWO alongside the Market Trend Levels Detector, you're aligning trend direction and momentum, which helps filter out low-quality trades and keeps you trading with the flow of the market rather than against it.
Step 3. Entry rules and trade setup. Now that both indicators, the Market Trend Levels Detector and the Elliott Wave Oscillator, are on your chart and properly configured, it's time to put them together into a clear and structured trade plan. The goal is to only take trades when trend direction, momentum, and price action all agree. This ensures that every setup you enter is backed by multiple confirmations, not just a single signal. Buy setup. Conditions. Before entering a buy trade, make sure all of the following conditions are present. The Market Trend Levels Detector prints a buy signal, shown as a green arrow on the chart. A green cloud forms beneath price, confirming that the broader trend is turning bullish. The Elliott Wave Oscillator shows green histogram columns, which means momentum is rising and buyers are driving the move. A bullish candle forms and closes in the direction of the signal, ideally above the most recent structure level or the green cloud zone. When all four conditions align, that's your cue to enter the trade. Entry. Place a buy order immediately after the bullish candle closes. Waiting for the close ensures the signal is confirmed and avoids getting caught in temporary wicks or fake moves. Stop loss. Set your stop loss just below the green signal line from the Market Trend Levels Detector. This level usually acts as dynamic support, so keeping your stop slightly below it provides a balance between safety and room for natural price movement. Avoid placing it too tight. A little space reduces the risk of being stopped out by small pullbacks. Take profit. Aim for a 1 to 1.5 risk-to-reward ratio. For example, if your stop loss is 20 pips, set your target profit at 30 pips. This ratio ensures that even with a moderate win rate, you'll maintain a positive expectancy over time.
Sell setup. Conditions. Before entering a short trade, confirm that every signal aligns clearly. This helps filter out false reversals and ensures you're trading in sync with the market's momentum. The Market Trend Levels Detector prints a sell signal, displayed as a purple arrow on your chart. This indicates that sellers are beginning to dominate the market. A purple cloud forms above price, confirming the transition into a bearish environment. The Elliott Wave Oscillator shows red histogram columns, signaling that bearish momentum is strengthening and confirming that downside pressure is active. A bearish candle forms and closes below the cloud or recent structure, showing clear price rejection from higher levels. When all conditions align, that's your confirmation to take a short position. Entry. Place a sell order as soon as the bearish candle closes. Waiting for the close prevents early entries and avoids being caught by false signals during candle formation. Stop loss. Position your stop loss just above the purple cloud line. This acts as your technical invalidation point. If price moves above the cloud, the bearish setup is no longer valid. Allow for a small buffer to avoid premature stop-outs from quick retests or short-term volatility. Take profit. Target a 1 to 1.5 risk-to-reward ratio, meaning your profit target should be about 1.5 times your stop size. This helps maintain a balanced approach. Even if you lose a few trades, your winners will more than cover them over time.
Step 4. Why this strategy works. This method combines trend detection, momentum confirmation, and price action validation, 3 of the most reliable principles in trading. The Market Trend Levels Detector identifies key reversals and filters noise. The Elliott Wave Oscillator confirms whether momentum supports the signal. The final candle confirmation ensures your entry aligns with real-time market strength. Together, they form a simple but effective trading framework that works across forex, indices, and crypto markets.
So, to recap, add the Market Trend Levels Detector for structure and trend signals. Add the Elliott Wave Oscillator for momentum confirmation. Enter trades only when both indicators align and a confirmation candle appears. Use a 1 to 1.5 risk-to-reward ratio. Remember, no strategy is perfect. The key to long-term success lies in risk control, discipline, and consistency. Backtest this strategy, observe how it performs across multiple assets, and refine your settings for your preferred time frame. Trade with logic, not emotion, and let data guide your decisions. Thanks for watching, and may your next trade be your best one yet. Happy trading!